11%. In a single trading session, silver just got taken out back and shot. If you're looking at your portfolio right now, you are bleeding, you are scared, and you're wondering if the bull run is over. Turn on the TV, and what do you hear? The talking heads are celebrating. The economy is strong, jobs are booming. The Fed doesn't need to cut rates because America is invincible. They're telling you that silver crashed because the dollar is king and the recession is canceled. That is a lie. What we witnessed today was not a market correction. It was a coordinated hit. It was a manipulation event designed to leverage a fake data point, the jobs report, to trigger a cascade of stop-loss orders and steal your shares on the cheap. They want you to believe that the economy is so hot that nobody needs safe havens anymore. But I have the internal data that they forgot to mention on CNBC. I'm going to show you that the strong jobs are a statistical hallucination. I'm going to show you that this crash wasn't caused by selling. It was caused by forced liquidation. And I'm going to prove to you that while the price is down 11%, the physical shortage just got worse. If you sell today, you are validating their fraud. If you hold, you're about to catch the rebound of a lifetime. Wipe the blood off your face. We have work to do. Let's dissect the weapon they used to murder the price of silver today. At 8:30 a.m., the Bureau of Labor Statistics, BLS, released the non-farm payrolls report. The expectation was 180,000 jobs. The number they released was a blowout 353,000. The algorithms saw this number, screamed strong economy, bought the dollar, and dumped gold and silver instantly. But here's the dirty little secret they didn't tell you on TV. Where did those 353,000 jobs come from? Did Ford open a new factory? Did Google hire 10,000 engineers? No. Over 60% of those jobs came from a statistical gimmick called the birth-death adjustment. This is an algorithm the government uses to guess how many new small businesses opened this month. They don't actually count them. They just plug a number into a spreadsheet based on historical trends. So, while small businesses are closing down on Main Street because of inflation and high rent, the government's computer simply assumed they were booming and added hundreds of thousands of foreign phantom jobs to the total. These jobs do not exist. They are keystrokes. They are ghost jobs. And it gets worse. If you look deep into the raw data, which nobody does except us, you will see a terrifying trend. The U.S. economy actually lost full-time jobs last month. So how did the total number go up? Part-time jobs. Americans are so broke that they are taking on second and third jobs just to pay for groceries. If a software engineer gets laid off, losing one full-time job, and starts driving Uber and delivering DoorDash, getting 2 part-time gigs, the government reports that as a net gain of +1 job. The headlines scream booming labor market. The reality is desperation. The economy isn't getting stronger, it is fracturing. People are working harder for less money. That is not bullish for the dollar. That is the definition of a third world collapse. But the high-frequency trading, HFT bots, don't read footnotes. They only read the headline number. They saw +353K, executed a sell silver program, and wiped out 11% of your portfolio in 4 milliseconds, based on a statistical lie. This wasn't a sell-off. It was a glitch, and glitches always get corrected. So here's the narrative they are selling you today. Because the jobs market is supposedly invincible, the Federal Reserve doesn't need to cut rates in March, or May, or even June. The logic goes, the economy is hot, inflation is sticky, so rates stay high forever. This sent the dollar index, DXY, skyrocketing and crushed silver instantly. But here's the problem with that story. It is mathematically impossible. The strong economy narrative is a bluff designed to buy time. Because while they are celebrating fake job numbers, the foundation of the U.S. banking system is literally turning into dust. Look at what is happening in the commercial real estate, CRE sector right now. We have office towers in San Francisco and New York selling for 60% off their 2019 valuations. These buildings are the collateral for hundreds of billions of dollars in loans held by small and medium-sized banks. If rates stay high, if the Fed actually follows through on this no rate cut threat, those loans go bad. And when they go bad, the banks that hold them go bankrupt. We are staring down the barrel of a banking crisis 2.0 that will make 2008 look like a warm-up. The Fed knows this. They know that higher for longer is a death sentence for the entire regional banking sector. They have to cut rates, they have to print money, they have to bail out the system. So why lie about the jobs numbers? Why pretend everything is fine? Because they need to crush inflation expectations. They are terrified that if you realize they are about to turn the money printer back on, you will panic buy silver and gold, sending inflation to 10%. So they rig the data. They paint a rosy picture to keep you in the dollar and out of hard assets. This crash in silver is a head fake. It is a temporary price dislocation caused by a lie. The market is pricing in a Goldilocks scenario, strong growth, no recession. But the reality is a nightmare scenario: stagflation, banking collapse. When the first regional bank fails next week or the week after, and the Fed is forced to panic cut rates despite the strong jobs, the illusion will shatter. And when it does, that 11% drop in silver will reverse into a 20% vertical launch in a single morning. They are trying to shake you out before the real crisis begins. Don't let them. So, here is the verdict. We have exposed the ghost jobs that pumped the market. We have dismantled the no-rate cut bluff. We have proven that the U.S. economy is not booming. It is bleeding out. The 11% crash you are staring at right now, it is not a loss. It is a liquidation sale. The bullion banks just handed you a gift wrapped in panic. They used a fake government report to smash the price down to levels we haven't seen in months, desperate to cover their own shorts before the banking system cracks. Do you think the Chinese are selling today? Do you think the Indians are selling? No, they are laughing at us. They are backing up the trucks to the Shanghai Gold Exchange and draining the physical metal that the Western paper market is throwing away, while American retail investors are panic selling because of a spreadsheet error at the Bureau of Labor Statistics. The East is buying real wealth at a discount. Here is your battle plan for the next 72 hours. 1. Do not feed the beast. If you sell a single ounce of silver today, you are literally transferring your wealth to the very people who rigged the game against you. Do not give them your cheap silver. 2. Buy the blood. If you have cash on the sidelines, this is the moment you have been waiting for. When the street runs red, the wolf starts eating. Go to your local dealer, look at the premiums. If the spot price is down but physical premiums are up, that tells you everything. 3. Watch the banks. Forget the jobs report. Keep your eyes on the regional banking ETF, KRE. The moment that index breaks support, and it will, the Fed will pivot so fast it will snap necks, and silver will erase this 11% drop in a single hour. They want you broken. They want you scared. They want you back in the dollar. Refuse to comply. We are not here for the soft landing. We are here for the hard reset. And today? Today was just a volatility test. If you are still standing, you passed. I want to know who has hands of steel. Drop a comment below with, "I buy the blood," if you're scooping up cheap silver while the sheep run for the exits. Let the tourists panic. We are here to stack, stay liquid, stay dangerous, and remember, the price is fake, but the weight is real.